Welcome, my friends. The news today is that Warren Buffett's Berkshire Hathaway reveals it sold a bunch of long-held stocks and made at least one secret bet. Warren Buffett's company sold a bunch of stocks and made at least one confidential bet last quarter. Berkshire Hathaway exited long-held stakes in some long-held stock positions. General Motors, Johnson & Johnson, Procter & Gamble, United Parcel Service, and Mondelez. But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Warren Buffett's Berkshire Hathaway Inc. reduced the number of stocks in its portfolio in the third quarter, exiting stakes in General Motors and Activision Blizzard Inc., while trimming bets on companies including HP Inc. The conglomerate's retreat from Activision completes Buffett's arbitrage play amid the video game maker's prolonged effort to merge with Microsoft, which ran into antitrust scrutiny before the deal was completed in October. Altogether, Berkshire exited stakes in 7 companies, not including the restructuring of its investment in Liberty Media Corp. and related entities. The value of its disclosed investments decreased 10% from the previous quarter to $312.8 billion. Berkshire also reduced its stakes in Amazon, Aon, Chevron, HP, Markel, and Globe Life. On the other hand, it disclosed new positions in SiriusXM, as well as the Atlanta Braves in both A and C shares of Liberty Media Live, which stemmed from the spin-off of the Braves into a separate public company this summer. Berkshire's batch of stock sales was foreshadowed by its latest earnings, which showed the company spent only $1.7 billion on stocks, but sold $7 billion worth last quarter. The conglomerate's cash pile also swelled to a record $157 billion, suggesting Buffett and his colleagues struggled to find bargains in the period. Buffett and his colleagues made similar tweaks to their stock portfolio in the second quarter. They switched out 3 holdings and paired several others, while also taking stakes in a trio of home builders. Berkshire's vice chairman and Buffett's business partner, Charlie Munger, hinted he had soured on GM during a recent podcast. In its heyday, General Motors was a great company. It just gradually went to hell one contract at a time, he said. The reason behind the sale of these stocks is not clear. However, it is speculated that the company may have sold these stocks to raise cash for other investments or to take advantage of the current market conditions. The sale of General Motors stock is particularly noteworthy, as it was one of the company's largest holdings. The sale of these stocks has raised questions about the company's investment strategy and the future direction of the company. Warren Buffett is piling up cash because he sees a storm brewing and can't find bargains, wealth manager says. Warren Buffett's Berkshire Hathaway held a record $157 billion of liquid assets at the last count. The cash pile signals Buffett's not finding bargains and expects trouble next year, Lee Munson says. Berkshire is betting on growth and value with Apple and Bank of America, the wealth manager says. Warren Buffett's stack of cash is bigger than ever because he spies problems on the horizon and he's struggling to find bargains, one wealth manager says. Buffett's Berkshire Hathaway held a record $157 billion in liquid assets like dollars and treasury bills on September 30th. The astonishing sum made up 15% of its $1 trillion of assets at the time, and it's equivalent to 20% of the company's $783 billion market capitalization as of Thursday's close. I think he sees trouble next year, Lee Munson, the president and chief investor of Portfolio Wealth Advisors, told Yahoo Finance on Thursday about the significance of Buffett's cash pile. It means be cautious. He doesn't see any screaming deals. Buffett struck a dour tone on the U.S. economy in May, warning of a different climate versus the rock-bottom interest rates and freewheeling government spending during the pandemic. He predicted that most of Berkshire's subsidiaries would report profit declines this year. As a value investor, Buffett specializes in buying stocks and businesses at a discount to their actual worth. He's pledged to always have at least $30 billion of liquid assets at Berkshire to ensure the company never fails to meet its financial commitments. Having plenty of dry powder also enables him to pounce on cut-price assets and strike lucrative deals at tough times, as he did during the 2008 financial crisis. Buffett made his fortune by investing in American companies like Coca-Cola and Kraft Heinz. But as valuations have steadily climbed over the past decade, he's had to expand his search to find compelling deals. For example, he revealed 5% stakes in 5 Japanese trading houses in August 2020, and has grown those positions to nearly 9% since then. But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.